The stock of the day is brought to you by IG, Australia's #1 CFD provider. Trade over 17,000 markets with extended trading hours on key US shares and competitive spreads, all on an award-winning platform. Get started at IG.com.
And our stock of the day is CSL. Shares having been hammered this morning as it holds its AGM. It expects a further decline in US influenza vaccination rates over the 2026 financial year. Now expects 4 to 7% net profit growth, excluding restructuring costs. In addition, it's warning of uncertainty in US vaccination rates over 2027 and 28. And as a result, the group has lowered its after-tax profit expectation to the high single digits. So interested to see what our experts think. And I guess particularly through the lens of an income investor, would this feature at all, Francisco?
No, not at all. Not from an income point of view. This is a growth or lack of growth, as we've seen here today. But even all things being equal and normal trading for CSL, your dividend yield is less than 1%. It's less than 2%. So you're not in there to boost your income in your portfolio. You're in there to extract a bit of growth, which, as you can see from that chart, has been going in the opposite direction for probably the last 12 months or 18 months. Look, the reason for the fall today was they had their AGM. They've cut guidance. NPAT is now expected to grow at between 4 and 7%. It was at 7 to 10%. Revenue growth at 2 to 3%, was at 4 to 5%. And that's mainly due to weaker flu vaccination rates, particularly in the US. The Seqirus demerger delay, they're no longer targeting FY26 for completion. And will it go ahead? I think it's a good move to strip it out, but the question is, how long will it take and when will it happen? Flu vaccine, US vaccination rates are expected to fall about 12%. So a lot of things working against them. But I look at this now and go, well, our analysts would have, after the results last month, would have sharpened their pencils and reduced their earnings expectations. Whether they've done it enough to meet what the AGM's put forward today, I don't know. We have a hold recommendation post the reporting season, but this is only today come out, so the analysts will be working on that overnight. I wouldn't be surprised if they switch to a more positive recommendation with where the share price is trading at. Let's say they do reduce their NPAT by down to 4 to 7% growth from 7 to 10. What does that put their PE on? Currently, it's on FY26 16.5 times. Let's say it goes to 17 or 18 times. Ultimately, CSL's consistently traded in the high 20s. And if you look at most healthcare stocks that are trading normally, they would be in the high 20s. So obviously CSL's not in a normal trading pattern, but is this the worst of it? Are we looking at a turnaround story? And I know a lot of clients are holding CSL. I've got clients that hold CSL from the float, which means their cost base is 67 cents, and they're not doing anything. But I would say that I'm leaning more towards starting to buy it, particularly at these price levels.
All right, I'll call it a buy then. Michael?
I've been a CSL bull for forever. Call it capitulating, but I'm less confident now than ever. And that could be, who knows, a contrarian buy signal. But this is a company that was meant to be growing at 20% this year. Going back sort of 6-12 months, all the analysts had factored in 20% earnings growth. They're now lucky to be growing between 4 and 7%. It was only 2 months ago that they had their earnings update. And those numbers were underwhelming in the extreme. So this is clearly a business that has a few issues going on. There's no two ways about it. Obviously, vaccine rates down significantly in the US, but also some of their sales into China have been struggling as well. So although the business is very, very cheap, it's no longer growing at double digits, let alone 15, 20%. So I just don't see how this turns around in the near term now that it's really underwhelmed the market twice in quick succession. It's still a very high quality business. I just think it's going to take some time to work through this. And obviously, management have come out themselves. The chairman has been on the record in saying that there are changes within that business that need to be made. And now they're going to have to begin the big task of turning around what is quite a large behemoth of a company. CSL regarding dividends is also, an interesting question, because historically CSL has been a very good company to hold for dividends. Although the headline yield's never been good, the income that you receive even today, even after their average update in August, is paying you 3 times as much income today as it was 10 years ago. And in fact, if you put $100 in CBA 10 years ago or $100 in CSL 10 years ago, you're actually making more income from your CSL shares today than you are from your CBA shares. So that growth in income is very important. CSL is not going to grow its dividends by much over the next couple of years, given the slowdown in their growth rates. But if they are able to ramp up their growth again and recapture their position as a market darling, then perhaps it is one to consider within an income portfolio as being a healthcare stock. Healthcare stocks don't pay dividends, not much dividends historically, because they reinvest that into future growth and doing clinical trials, etc. So you'll never really find a healthcare company paying much of an income.
So it is
for me, for the moment, it's a sell. With looking for alternatives elsewhere while this company tries to conduct its turnaround story.
That is a buy and a sell for CSL, our stock of the day.
The stock of the day was brought to you by IG. Trade over 12,000 shares and ETFs, including major tech giants with extended hours on an award-winning platform. Get started at IG.com.